Good morning. So I have the privilege of leading Accenture's Global R&D Center, the DOC, based here in Dublin. So our focus is trying to uncover new ways to fulfill human needs using emerging technologies in ways that deliver value for consumers as also value for enterprises, such as yourselves. One of the things that we've learned over the course of the past 2 years, where we've had almost 200 companies that we've been doing co-innovation with. For some of them, it's about setting their agendas of what they should focus on going forward. For others, it's been prototyping new ideas. And one of the things that we've learned is it's not always a lack of ideas. In fact, very often, a lot of companies come to us from a variety of industries, including insurance, not with a lack of ideas or a lack of vision, but the question is how to make this happen. And the realities of global companies that are quite big, and the realities for many being publicly listed and the pressures that come with that, how can you actually make innovation real? In fact, this will build in somewhat what I heard Barry talking about earlier in terms of the example that he said of the facility that he would have, of how to move from just ideas and science fiction projects into things that actually are meaningful for the business. So I would like to share with you 3 reflections that we've been learning from our time in the dock to provoke your thinking, generate some ideas, and some debate on the panel here in a few minutes. So shall we dive in? Yes, let's go. Good. Still there. So the first reflection is on this topic of disruption. And in order to make innovation real, we're noticing that the executive teams, the leadership teams of companies need to have a common understanding of disruption and what it actually means for their industry. There is a healthy dose of skepticism out there of how much some of these startups are really going to make a difference, how much some of this tech can really be used. Different members of the executive teams, from marketing to CFOs to CIOs, will have different opinions. If you want ideas to scale throughout the organization to make a difference, the executive teams need to create an environment where they see what the priorities are and how it's fulfilling a broader vision. One of the ways we do that to get under the skin of this discussion is through something we call Disruptability Index. It's a piece of research we did a couple of years ago to illustrate what disruption means across different industries. And for much of my address here at the beginning, I'm going to give you lessons learned from different industries to influence your ideas here for insurance. So, I'm a bit freaked out that there's a bunch of actuaries perhaps in the room, and I'm showing a chart with numbers on it. This is our from last year, our disruptability index for across industries. The y-axis is the level of disruption that we're measuring across different industries that are happening right now, and the x-axis is the future susceptibility. You see insurance. It's in an area that we call vulnerable. These industries, and you're there with banking and utilities, are ones that we see that disruption actually hasn't hit that hard yet. It's relatively low on that scale. This is usually due to some sort of barriers to entry that the others have found difficult to come into an industry, but there's also indications of structural weaknesses in these industries that at some point could push them up into volatility. And I wanted to share with you, because I have the benefit of getting across industries coming in different types of clients. If I was to share with you, for instance, retail, you see them there up in viability. You know, if you look year 2000, what's that, 18 years ago, imagine you're a retailer, right? Amazon was for books. Who would buy clothes online? Because you have to try those on, right? I invested in a company called Webvan, which was about delivering groceries to people's home. Webvan went under. I lost my money, and a lot of these internet companies in that internet bubble burst, right? But when I've had retailers in the dock over the past couple of years, they'll tell a really interesting story about what happened later in that decade. Because early in the decade, they were like, you know what, I don't think this is a big deal. But there was a big bang shift that happened over about an 18-month period where people like yourselves in this room and around the world decided, you know what, I will buy clothes online. In fact, I'll do virtually all my Christmas shopping online, and I will do loads of things online. And what they'll say is the retailers that were experimenting, that were preparing, that were trying, even though it wasn't quite picking up in the earlier part of the decade, it was the difference between those that have gone bankrupt, and we can think of a lot of those brands already, or are currently on the verge of trying to survive. So their advice, if I had retail as an industry talking to insurance, would be if you find yourself in this area right now, think about these no-regret moves and the top 5 things you're doing to continue to experiment in a meaningful way in the event that something happens. And let me contrast this with the comms industry, so the telcos. They've been coming a lot, and I don't know if any of you maybe have people in that industry, but this is my picture of a telco at the moment. So for them, disruption has felt quite different. It's been each year over the past, again, let's say the past 2 decades, each year slightly more difficult than the last. Slightly more pricing pressure, slightly more pressure on costs, one more cost reduction program. NPS, still negative, but we're trying to make it at least less negative than our competitors. Each year, a little bit harder, but acclimating. A little bit harder, but acclimating. A little bit harder, and then acclimating. We call this compressive disruption. So it's not what retail felt. This is a different feeling. This is eventually, what I say now is they're coming into the dock and they're just exhausted. The notion that next year is going to be another round of the same stuff they've gotten over for the past few years, there must be another way. And again, so what they're searching for is, again, what are these top 5 key ideas that the executive teams and the company rally around to say we are going to pursue, because we're going to find new ways to add value and not just continue in only optimizing the core business. So that first lesson is around how are you in your companies and in your industry thinking about what disruption actually means for you, what you're anticipating, and what are those no-regret moves that you're willing to take, and to make honest-to-God investments in them, not make it some science fiction facility that you put over to the side. The second topic, or reflection, is I get the question a lot of what's the difference between the ideas that scale and make money versus the ones that just sit in sort of innovation. And so we've learned now over the past few years in the doc, there's 4 things I look for, and if I don't see all 4 things, I'm not very happy. If I see all 4 things, I think we've got a winner. So number 1, I start with the obvious, emerging technology. I'm sure you'll hear a lot about that today. You hear a lot about it out in the marketplace. For your industry, I hear a lot about connected IoT devices out there, you taking data in, processing that data using artificial intelligence to push it out in the way that you assess claims and the way you interact with customers. Let's say the blockchain, maybe drones to some extent, I hear insurers talking about a little bit further out there. That's important, but unfortunately for some companies, they think innovation is tech. And if that's your perspective, the likelihood that it's going to go anywhere is not high. We've learned that. It's an important ingredient, but not the only one. Let's add into that the second ingredient, human needs. So what are these solutions actually doing for your consumers? And for many companies, what we get into in this discussion with the executive teams is reawakening entrepreneurship. What things can you do for your customers beyond what your traditional product set does? And then that starts to inspire ways that you can use new technologies. I have an example of connected airports. Maybe many of you flew here, you recognize this. We were looking at ways to use new technologies in order to make travel through airports even smoother. So filling it with beacons and IoT devices and the way that you would navigate through the airport. And beautiful ways of, a single parent walking through with 3 kids and how to fulfill their needs through. I can that project because of the third reason, commercial propositions. Try to convince an airport authority to invest $30 million in IT so that you can make queues 10 minutes shorter. And how does that react with the airlines and then the retailers and then the immigration that's connected to the government in the different countries? The commercial propositions is a lot of what we debate in the doc. It's actually tech is part of it, but how to create win-win scenarios with partners that haven't traditionally worked together. This is a key part. Now, usually when these 3 things happen, I get very excited, and I'm thinking this idea is going to go somewhere. It can make money, people want it, and the tech can do it. There's one last dimension, though, that we're seeing increasingly, is the should we dimension. So I had the chief marketing officer of a huge global hotel group in. Their question was with their team, how can we create more personalized experiences for our hotel guests so that we can engender loyalty and improve revenue? And I've said over those 2 days, we ideated some of the creepiest things you can ever imagine. Right? What's the line? You know, a hotel knows what you're watching on TV. If you've got the loyalty program, they've got all that information. If you're connected to Wi-Fi, they know where you are. They know what you had in the bar. The question was, should we? Where's the line between personalization and creepiness? Where's the line between invasions of privacy? And I would even say in your industry, when I hear what we were looking at Fitbit data and how we're going to use that, or connected cars, and what does that feed back to yourselves and how to use that data, I think it is a real-life interesting thing that companies are looking at as another, I would say, fourth dimension to think about so that we don't get ourselves into a Cambridge Analytica or other sort of a situation there. So when we look at these 4 dimensions, I get quite excited. So that's number 2. Number 3, I'm going to be brief on, but to make innovation real, I think the likelihood that you'll do it all on your own is low. This need to partner with emerging tech companies or startups, the need to partner with other industries. And I give some examples here. Insurers are not new to this. In fact, you would be, I think, compared to some industries, relatively good at the partnerships that you create with other companies. I've given Aon, Allianz, AXA, just a few examples that were pulled out here. Really, what I want to, I guess, advise on this is across all the industries, they're all interested. That's the good news. And it's usually around the home, the car, the airport. They're gathering around particular spaces and figuring out, I'll have a utility that will come in to talk about connected home, and do you think the financial services people would talk to us if we're going to move into this? Or would I talk to a telco about this? Or would I, So there's definitely interest, but it is hard. But I think finally it's unavoidable. And the question is for yourselves, are you out there a part of these discussions, yes or no? Because I think that's definitely a momentum that we're seeing in the doc. So there's 3 areas in order to make innovation real. The first is that there's some alignment around what disruption actually means for you in a way that the executive team believes and is willing to put some effort behind and sponsor. 2, that you're looking at new ideas in those 4 dimensions, not just tech or not just human needs, but all 4. And 3, partnerships and pursuing how you're going to partner with others and to pursue some of these new ideas. To close, as you think about crafting an industry for a modern vision, what are some of the beliefs that are deeply held, widely shared in your company and your industry that could be holding you back? I'm saying beliefs, not laws of nature, beliefs. We asked that to just over 40 companies. We've received 700 replies. Here's a selection of some of them. These are beliefs some companies say they think are holding them back. They're not laws of nature. Failure through compliance is more acceptable than challenging the status quo. Our employees can't be trusted from to work at home. Again, they don't write these down. But when we get them to talk, we're saying, what are some of the beliefs that could be holding you back? Some of these you may share, some of them not. The point is, though, when we think about how you're going to craft an industry for a modern vision, get those out, turn them upside down. Now what's possible? What would you do to craft the future industry? Thank you very much. Be bold and make it real. Thank you.
Thank you very much, Ryan. And just quickly to introduce the panel, we have now an insurance panel as we start to take some of those points that Ryan said and bring them to life for your sector. Please, we also have the questions open again, so there will be a chance at the end if you start to put some questions in as you hear the people speak, we'll absolutely get to them. So just quickly to introduce, we have Brona Magee, who's a Deputy CEO and Head of Global Markets at SCOR Global Life. We have Deeksha Joshi, Managing Director in Corporate Strategy and Research for Liberty Mutual Insurance. And we have Fergal Collins, CEO of the Elon Centre of Innovation and Analytics based here in providing global services from here in Dublin. So thank you very much for attending the panel. Just to kick things off, Fergal, do you mind just providing a little bit of detail, running a global innovation centre as well from Dublin? Maybe just make it real for yourselves in insurance. How do you see innovation changing what Aon does globally?
I think that's a theme that definitely has been discussed, is making things real. So from our perspective, like we're 10 years in Dublin as an innovation centre. In fact, I see in the audience, I see Stephen Cross, who was one of our founding fathers, I guess, for the ACIA. But 10 years on, we're now 140 people spread across Dublin and Krakow, and it's a good balanced mix of technologists, data professionals, so that's a big spectrum, data scientists, data analysts, data engineers, and all the stuff that goes around that in terms of product owners, scrum masters, UI, UX leads, et cetera, But the thing that I think really just is good to point out in relation to making innovation happen is that they all happen to be kind of pretty much under the one roof. And I think from that perspective, that means it's like a bit of a petri dish that is nutrient rich and allows us to kind of be that catalyst for innovation. So I think there's two ways in which we feel as if we can contribute to innovation in Aon. One is indirect and one is direct. From an indirect perspective, we're responsible for what is becoming a global enterprise analytics platform for all of Aon's data. By that, what I mean is that there's certain patterns in terms of how one does innovation. And yes, it's the good ideas starting off with, but oftentimes they become grounded or on the rocks because how the hell do I move on from this good idea and get the right data, go through the hoops with terms of data compliance and GDPR, and then even contemplating going to live on the whole thing. So what we do is we're trying to establish through our singular platform, bring all Aon's data into one place. So that's like not just our own structured data, but it's unstructured, it's internal, external. Bring that all into one place that's governed centrally. And secondly, what we do is these analytical patterns that we try to get muscle memory into our organization on. So by analytical patterns, I mean there's a certain order in which you move data around so that you can innovate and so that you can experiment. And the whole idea is that you discover data, you ingest that data, you prepare it, you analyze it, and then you visualize it, and then you get it out there in the right channels. And the more kind of free-for-all that is, the more innovation is stifled. So that's one big mandate that we have, is to try to get that muscle memory, try to get that flywheel slowly turning so that more and more people in Aon, not just ourselves in Dublin, can start thinking along the lines of data-driven innovation, but there's a pattern to it, because innovation in a vacuum kind of is a bit of a free-for-all and prone to things not working out. So that's one way indirectly that we do it. And as some of you will know, that Aon is a product of 400 acquisitions down through the years, and we have to have that consistency. And then more directly, in terms of how we drive innovation, like we're the anchor tenants in our own platform, if you want to think of it like that. So we have to do work ourselves to support partners around the world in Aon to drive out new products. So at the moment, we're looking at a specific product, which is it's an MGA product for the US, and it's basically trying to address an unmet need in lower middle market areas of farm and food in the US. Okay, where there's an unmet need, for sure the big players get their insurance products, but the smaller players don't. And we think that through bringing in data from the US Department of Agriculture, the Center for Disease Control, the Federal Drug Administration, all these acronyms that I know you guys are familiar with, bring that into one place and actually start determining if we can create a product that is a platform in its own right for farmers in the Midwest to be able to get certain cover and for carriers to be able to interact on that platform. So that's kind of what we do, hopefully in action, a demonstration of what we're doing in action. So it's very exciting, and that dual role we play, I think, is vital in an organization to get that consistency in terms of how you drive out innovation.
Thank you. Deeksha, it was really interesting in your role with regards to the corporate strategy and research. For Liberty Mutual, how is innovation helping drive your growth agenda?
Absolutely. So I can talk a little bit about my role, and then I can talk about how we help with the innovation at Liberty Mutual Insurance. So first of all, thank you so much for having me here. It's a pleasure to fly from Boston and do an overnight flight and come here for this presentation. So I'm very, very excited right now. in terms of our role, so I'm blessed to be part of a team in Liberty Mutual that is always looking at trends and looking at technology changes, and to your presentation, Ryan, looking at how things are evolving, and then trying to take a step back to say how all of these things are impacting the future of risk and the future of insurance. And then helping our senior leaders to say what should be the strategy changes that we should be making to make sure that we are prepared for the future. So that's the work that I do on a day-to-day basis. So I feel really blessed about that. In terms of how we are making it real, how we are making innovation real for Liberty, I don't know how much time you have.
That much time.
Okay, I'm going to keep it short then. It's a hard question. Liberty Mutual is a global insurer with presence in 16 plus countries. And again, to your point, we have a lot of data. And data is definitely one of the key ingredients that helps with innovation. And we are looking at harnessing that data to get to incremental innovation in the beginning. But then we have other channels to start thinking about more broader and more transformational innovation. And we have a Solaria lab that we've set up. It's an innovation incubator that has been set up that is helping us form partnerships. And I heard, Ryan, you talk about partnerships and how important they are. We have a VC fund that also invests in other companies. So those are some of the other channels by which we work with outside partners as well as internal partners to drive innovation within Liberty Mutual. And I can also talk about the framework that we are looking for as we start thinking about innovation. At the end of the day, it's all about maturity of an organization to recruit innovation, to adapt innovation, and to execute. And the framework that we have, it's got 3 points. The first one is looking at innovation which is going to impact the core. So looking at things which will help us from a core perspective, helping build our business. So telematics would fall under that. Then we're looking at things which are going to help us disrupt the business model that we currently have. So we are looking at new products from that perspective. And then the third one is around diversify. We are looking at diversifying our current offerings and trying to bring new sources of revenues. And Solaria Lab, the VC fund, and the data is together helping us get to it.
Thank you. Brona, as your role in head of global markets, you clearly have a great view of what's going on across the world within this area. Why is innovation important to you, and how are you using that to drive your business?
Yeah, thanks. I think, we do getting that global perspective. As we look around the world, at particularly life insurance is the area I focus on. As we look at life insurance around the world today, it is very clear that the life insurance ecosystem is changing. We can see that there's more and more data available. Customers know an awful lot more about their risk. Clients know an awful lot more about their risk. And particularly, life insurance companies, we see, really want to engage with policyholders. So it's really moving. We see the insurance industry, the life insurance industry anyway, really moving from a model where you almost sold a policy and ran, and then you didn't engage with that policyholder again, probably ever, right? The next contact you had with the policyholder was when you spoke to their next of kin at the time of a claim. And companies are really moving away from that model, and they really want to engage with their customers. So we saw, Ping An is the biggest life insurance company in the world. They're a Chinese company. They've really moved from being an insurance company to being a platform company, where they offer services across a whole range, cradle to grave, any services that a consumer would need. They access through Ping An. We saw John Hancock in the US came out a few weeks ago and said that they would only now offer policies, life insurance policies, that had a vitality rider, vitality is a product whereby customers engage. They wear a wearable device. They do a certain number. They monitor activity levels and then get rewarded on the basis of that. So the industry is really, really changing quite significantly at different paces in different markets, but we definitely see the industry changing quite significantly. And in that industry, it's really important that we innovate, that we provide solutions that are much more focused on consumer demand, focused on consumer behavior, really meeting consumer needs. And we see our client companies who are in the insurance companies really looking for help with that. And we at SCOR, and I think with all the reinsurance companies, are really focused on innovation to try and help move the industry from one where there's a much greater focus on the needs of the consumer and engagement with the end consumer.
Thank you. And actually, just looking through some of the questions, there's a number of questions relating to how do you make that innovation stick and how do you do it? Maybe starting, Deeksha, with yourself. Just as we were talking and preparing for this, you had some really interesting points around engagement and how you, from the leadership in the wider organisation, you get them to adopt innovation and for it to stick. Do you maybe want to just give some of your insights on that, please?
Absolutely. So when we start thinking about innovative companies, and what comes to mind is, it's not that they have better people. I feel like we are all very innovative and we are all very creative in our own respects. It's about the methodologies the companies have and processes that the companies have and the maturity that the company has, which makes it an innovative company versus not. And as we start thinking about innovation, what we did was we actually created this hub, which I spoke about earlier, Solaria Lab, which is like a center of excellence that Liberty Mutual has. And when we created that, the main purpose for that group was to create new products and services. But what we realized very soon was that's not enough. You want that group to be able to create product and services, to not, and create it at a speed in which you can try, test, and fail. Failure is such an important thing, such an important ingredient and part of innovation that you need to adopt it. The second issue that we had once we started doing that was how do we now scale it? And it doesn't just remain within the lab, it has to go back to the environment, it has to go back to the 50,000 employees that we have. And for that reason, what we started doing was we started having people rotate through the lab. The lab is now a center of excellence that just not creates products and services, but also creates methodologies. It has people who do rotations through the lab, and then they go back to the business with those new methodologies, new processes, new thinking, so that they can now start bringing in more innovation within the places where they are. And they don't have to be a part of the lab as on a full-time basis to be able to do the innovation there. So I think that's how Liberty is doing it.
Thank you. And Fergal, and actually just picking up one of the questions that came through as well. Obviously, especially in a global insurance organisations, there's a huge number of legacy systems. Yeah. So much of what you're talking about is using technology to scale. Yeah. How do you balance the two to have that global platform but not be broken down and turn it into a migration project across legacy systems?
Absolutely. We're a product of over 400 acquisitions down through the last 20 years, so we have massive challenges, obviously, with the breadth of systems that are out there. And that was one thing that led us to kind of bringing it all together under this singular platform, which I think was the way out of that problem. And yet, nonetheless, I think scaling analytics and scaling innovation continues to be a big, big challenge, because what we find ourselves is in a situation where down through the years, we've had a few challenges. Like we came up with this amazing, or so we felt, amazing product called the Layer Pricing Optimizer. And what's not to like about a product that has optimizer at the end of its name? But unfortunately, when it went out and got scaled, people were just not buying into it. And I think it was because this idea that, and I know you're familiar with this basic formula, which is, quality of what you do and the acceptance that work, I suppose, gets equals the potency of what you do. And it's the acceptance is the challenge. So you can come up with some wonderful analytics, be it in a white paper, in a product, or whatever form that you channel that information. But if it's not accepted, it's not going to travel, it's not going to scale. And acceptance is about people understanding what it is they're actually being given to help them do their job better. And that's one thing that we've learned, and we didn't get it right initially, but we've learned that there's a couple of things you need to do together. One is you obviously need to have design thinking as part of the conversation up front, and really actually sit down and spend, days with senior leaders who understand the business inside out to really, really understand and to play back your understanding as to what they want. Otherwise, you build things they look great, but they're never used because people said, that's actually not what I asked for. That wasn't the question I was asking. So that's one thing we've learned. And the second thing is the fact that we need to have lots of different channels for the information we deliver. So whilst we may have this platform that has consistency in terms of governance, quality, technology costs, it's all that good stuff on a single chassis, we have to have a few different channels. So one channel is the don't make me think channel, because I'm a busy person, I need to get stuff pretty much like that, and I need it pre-packaged. And we have a channel that allows that to happen. But you also have channels for people who are a bit more experimental, a bit more daring in terms of how they want to use data, and we need to open that channel up as well. So within that platform, you can't say with a straight face that an organization of 140 people is going to innovate on behalf of the organization. You got to syndicate that out. So that's another channel that we have, whereby you can have your own workbench as an analyst, as an actuary, to be able to bring in your own bit of data, maybe perhaps, along with the corporate data. And then maybe the third bit is about sometimes you want to consume it in a different way. You want to maybe implant it into an application that you already have, a legacy application. So we have links, deep links into that are contextual. So the key point there really, Paul, is that it's about being flexible and being able to tailor your analytics to I suppose, address those different tastes in terms of how people take on that data, but yet get the efficiency that comes from having a singular platform.
Thank you. And I think just to reinforce, as somebody who is an analytics geek, I don't care about your legacy systems. We want access to your data. Yeah. We want to create the insight, and then we want to push the insight back into potentially a legacy system or whatever, so you use it. But absolutely, the actual legacy component, I'll let the IT architects worry about that. It's somebody else's problem. And Brona, just picking up maybe some of the other questions here, related to Ryan's point as well around the wider ecosystem for innovation. How's that something you're going, and how are you seeing that make a difference within SCOR?
Yeah, that's something, it's an interesting question. I mean, I think there's huge amounts of innovation happening in lots of different industries, and often those industries know nothing about insurance, but some of the innovations are very relevant to the insurance industry. So one area that we're focusing a lot on is innovation in the health industry. There is so much innovation in the health industry that really links very closely with insurance. So for example, we've worked with a company who developed a company called Health2Sync, who've developed an app to take and monitor blood glucose levels. That has allowed us to develop a product that provides insurance coverage for diabetes pretty much at the same rates that diabetics would get insurance coverage. So a huge impact on the insurance that we can, the people that we can cover from an insurance perspective, using some of the innovation in the health industry. And that we've also developed with some of our US client insurance companies. We've introduced a wearable device, a device called iBeat, where it's a wearable device and it tracks cardio activity and detects a cardio arrest or a heart attack when somebody's having a heart attack, and also has a huge network of individuals who are CPR trained and have a notification on their phone. And the whole idea is to get help to the person who's having a heart attack as soon as possibly can, which obviously has a huge impact on survival rates. And we've been able to work with some of our insurance clients to provide that device to their in-force policyholders where we feel that that particular policyholder is at a particular risk of having suffering from a heart attack. But I think the point is that a lot of these startup companies outside of the insurance industry have no idea that the insurance industry obviously they know the insurance industry exists, but they don't know their relevance to the insurance industry. So you almost have to go and find them. You almost have to go and look for them and bring them in and work with them to develop then solutions for the insurance industry. And working with those kind of companies is very different than the traditional partners you would have worked with from an insurance perspective. If you work with one of these startups and it takes you 3 or 4 months to make a decision on whether you want to invest in them or whether you want to do business with them, they've run out of money in 3 or 4 months. They've got people to pay, and they just don't have this huge capital base that we've become used to. So it's a very different type of mindset working with companies like that. You really have to be agile. You have to be prepared for some of them to fail. So you have to know that you're going to work with some of them, and it's not always going to work. But yeah, I think it's really important because all of this innovation happening outside of the insurance industry can really improve the value for consumers in the insurance industry.
Excellent, thank you. I'm also reflective, I remember the old CIO of the NHS. It's interesting, I suppose, as somebody who works a lot in healthcare, the role for insurers to actually drive innovation in that sector. The line from the CIO for the old NHS was, she has more pilots than British Airways. And there's nothing more frustrating than seeing your successful pilots sit in a small measure. Just also to pick up, maybe Ryan, I just changed slightly to pick up one of the questions. There's a few questions around the quote that was up around failure. I suppose insurance is historically quite a traditional industry. You know, one of the oldest industries, risk averse, one might argue. How do you see that cultural shift where organisations be more comfortable with the idea of failure and actually embrace it?
One thing I think that's not been helpful is the hype around the word failure, almost gratuitously irritating from Silicon Valley and other places. You need to be happy with failure. What it's really about is experimentation. I mean, no company is interested in failure for failure's sake. The question is, are you willing to do controlled experiments in areas that are new or unproven with limited investments, knowing that they may not turn out like you thought? And that's failure, right? So I reframe it. Yourselves in your industry, the engineers in other industries also don't like the notion of, I'm going to start a project so it can fail. People usually don't hire Accenture because we're good at helping projects fail. You know, like, it's not a helpful word in this way. What we're really talking about is experimentation. Trying something new, trying it out enough if you take design thinking over 6 to 8 weeks initially. Let's just see how it goes, then learn. And we may fail, it may not be what we thought, but at least we didn't make a big investment and we stop it. Or maybe we learn something else and we head off into another direction. So I think that's the cultural behavior that companies are trying to do. How can we create a little bit more room in our organization for experimentation to happen, rather than making sure everyone is 120% productive without any time and without any tolerance for anything not to go right? Obviously, there's parts of the company that should continue operational excellence and not be all about, you know, failure. You know, your payroll department and other things. It's not about, you know, let's see if this works. You know, but there's other parts. Let's say new product development, marketing, some areas that, you know, that give it a bit of space and an allowance of a bit of their time to try some things out that aren't for sure going to come through. And I think, you know, that's good failure. Is failure that you've tried, you've learned something, and then you've moved on.
Excellent. Thank you very much. Thank you very much, everyone, for your questions. I'm afraid we have now run out of time. So just to thank Ryan, Fergal, Deeksha, and Brona, really appreciate your time. Especially, I'm very impressed you've managed to stay awake. Thank you very much for that. Thank you, everyone.